So we're here with Lindsay Suka with Vision Investment Properties. And Lindsay, tell us a little bit about what Vision Investment Properties does.
Yeah, thanks, Trent. Yeah, what we do is we offer investors cash flowing real estate, typically condominiums throughout Alberta, where the investor gets 100% title to the property. And it's a great way to build a portfolio of real estate investments. So you could get a virtual apartment building where a lot of our clients might acquire a property, one in Grand Prairie, one in Lethbridge, maybe one in Red Deer, one in Edmonton, and they reduce their risk but maximize the diversification around Alberta. So we're really focused in Alberta. We love the economy moving forward. Looks very good. Alberta's coming out of a slump and we're into a recovery now. And it's a great time to look at investment properties.
So really what we're talking about is buying a revenue property. They wouldn't be investing in the company then.
Yeah, that's right, Trent. When an investor buys a property with us, they get 100% title to that property. So they own it. All the revenues, all the profits are theirs. 100% goes to the client. And it's a great way for a client to control their investments. The investor can sell it when they want. They could move into that property when they want. Or they could even refinance it when they want. So a lot of our clients might buy a couple of properties, and then over time, maybe 5 or 6 years out, they have enough equity they can refinance them, and then they take equity out and buy even more properties.
So it sounds to me like Vision Investment would be a middleman. Why would anybody need a middleman?
Oh, that's a great question, Trent. Yeah, because a lot of people can go out and do this on their own. But the reason people need someone like Vision Investment Properties, number one, is we have the experience and the track record to make these investments a success. Vision Investment Properties has been acquiring properties like this for over a decade. We've done over $100 million worth of acquisitions. And so really investors can lean on our experience and our due diligence to help them find a quality property. And typically we go in and we might buy an entire building, so 40, 50, 60 units at once. So we get a phenomenal price point on these properties, and then we can offer the individual units to investors at a below market value. And we only offer clients properties that cash flow. So the rent will cover all the expenses, and there's even money left over for the investor. So it cash flows. And then what we do is we have a unique rental assurance program to minimize risk for clients, and we also place property management for clients. So, for example, a lot of people don't want to just invest in their backyard because it might not be the best place to invest in real estate. Maybe your vacancy rate's really high, or maybe the price point's too high. So we look at different areas around Alberta, and not everyone has the time or money or experience to travel around and find their own properties on their own. So with Vision Investment Properties, just like to remind you, we're not financial advisors. When we show you numbers, they're really estimates. There's no guarantees here. We don't have a crystal ball for the future. So just so you're aware of that. So our mission with Vision Investment Properties is to create financial freedom for our clients by providing the high cash flowing real estate with investments to reach your goals. So at Vision Investment Properties, we've acquired over $100 million worth of real estate for our clients. And this represents over 500 properties in the last 7 years. And we have offices all over BC, and we've also expanded into Malaysia and Japan. There's a lot of interest around the world to invest in Canadian real estate. A lot of us sitting here in Alberta, BC, don't realize what's happening around the world, the amount of money that's flowing into Canada. Canada is seen as a safe haven for real estate in the next 5 to 10 years all over the world.
So you're not Lindsay, you're not just limited to the one area here. So they're really looking for broad areas to find the best deals. Is that what you're saying?
Yeah, what I'm saying is we're focused on Alberta, and the properties we acquire are in Alberta. But what I'm saying is that people all over the world have an interest in investing in Alberta, mainly because the rest of the world realizes how important that oil is, and the economy in Alberta is going to be phenomenal based on for a number of reasons, which we'll get into. But so people in Malaysia are actually buying properties in Alberta. People in Japan are buying properties in Alberta. Even money's flowing in from Europe and the Middle East even. So It's a very desirable place to buy real estate. Here's our track record at Vision Investment Properties. And here are just a number of buildings that we've sold out to investors. And you can see on here we focused in Ontario in the mid-2000s, and we've switched over to focusing on Alberta in the last 4 or 5 years or so. And the rental yield on our properties is around the 7, 8, 9% range. And that really doesn't tell you a lot, but it's just the gross rent divided by the purchase price. So it just gives you a feel for the number of projects we've done, and they're all performing very well. So we're going to talk a little bit about the investment industry, and then the fundamentals of Alberta. We're going to go into the investment opportunity that we have available right now, and then we'll do a little bit of investor education, which is where we show you how to analyze the numbers on a property like a professional investor. I'm just going to briefly touch on the investment industry and what the average Canadian typically does with their investment dollars. Should show you here the S&P 500 index over 10 years. And it's really been called the lost decade, where investors haven't really gotten anywhere. So the average Canadian will simply have an RSP, and they'll try to save as much money as they can, and they'll pump their money into their RSP, typically in mutual funds. And this really is not a successful strategy for investors, and it hasn't worked in the past. We don't anticipate it to work in the future. And so here the S&P 500 index is the broad market index of 500 different companies in the U.S. And it's a bellwether index for how the markets are doing. And it's really hard to become wealthy in the stock market. And right now it's become more of a trading environment. And so when you think of your lifespan, you have about 30 solid years to work and save money. And if you've just lost 10 of those years, you're really behind the 8 ball. So we really need to look at what creates wealth. Okay?
Yeah, I think what you're pointing out here is that your ability to retire could be timing induced here, couldn't it? If you're just relying on the stock market, you could get to the point where you need to retire and there's nothing left.
Yeah, the stock market really, we're looking at paper assets here, and a lot of the top thought leaders out there right now, like Robert Kiyosaki, David Bach, a number of these top thought leaders on investments are talking about getting into hard assets. This is the time to get into hard assets, owning real estate, oil, gold and silver, and it's a good time to own hard assets. And paper assets have not worked. When you look at the stock market index as well, typical mutual funds, they all have what's called a management expense ratio. And in Canada, unfortunately, we have some of the highest fees in the entire world for mutual funds. So, for example, in this index here, over 10 years, say you had $100,000 originally, at the end of, even if you had $100,000 left at the end of 10 years, the mutual funds are going to charge an average in Canada is about 2.5% per year that they take out of your funds as fees. And so over those 10 years, they charge you $25,000. So you wouldn't even have your $100,000 left. You might have about $75,000 left. So it's a very unsuccessful strategy. Myself personally, working in the exact market industry, I've met over 500 investors in the last 4 years, and I've analyzed their portfolios and looked at what's worked and what hasn't worked. And I can tell you from my experience, it hasn't worked at all for investors to become financially free. And what we have here at Vision Investment Properties is we have a recipe for success that's going to work, and that's what we're going to get into here today. So this should be looking at the S&P 500 index over 60 years. Okay? So you can see in the 80s and 90s, this was really where baby boomers were pouring money into the stock markets in a desperate attempt to try and acquire wealth so they could retire. But what's happened now is the market's become extremely volatile in the last 10 or 15 years. And really, if you are pouring money into your RSPs and into mutual funds to try and retire, and you can see the wild roller coaster ride that you would be on. And just imagine if you go to retire, if this is your strategy, obviously what you're going to be doing is just withdrawing money from the stock market over time to retire, because that's what your plan would be if you're putting money in mutual funds. Just imagine if you retired in 2000. Okay? Just imagine what would have happened to you, because within 18 months you could have lost 40 to 50% of your portfolio, and you're looking at a solid retirement would be very at risk. And so what we're looking at creating for investors is a steady stream of reliable income that's going to be hedged to inflation. And that's what we're looking at Vision Investment Properties. Okay? So here, when you look at the different asset classes and how they've performed over time, you can see that real estate has significantly outperformed the stock markets. And that's even if you paid cash for real estate. Okay, most people will get a loan when they buy a revenue property. So even with a 50% down payment, when you look at the kind of lighter blue or turquoise bars, it would far outperform the stock market, even with a 50% down payment on real estate. So I recognize that these are past returns, which may not be a predictor of the future, but this is what has worked best in the past, is investments in real estate and having rent that comes in every month, irregardless of the markets. Okay? And here we can look at price inflation. And over time, the purchasing power of the dollar declines. And in 1918, this is really when a dollar equaled a dollar. And when you see how inflation has eaten away at the value of your dollar, today that same dollar is only worth 2 cents. Okay? So the value has really dropped off. And really when you look forward, now with the governments printing so much money, in the last couple of years, governments all over the world have printed more money in the last couple of years than they have in the entire history of the world. There's just been trillions and trillions of dollars been printed. And we can reasonably expect this line to drop right off. And in the near future, the purchasing power of your dollar is going to drop even faster. And it's a good time to look at assets that are going to protect you from this devaluation of the dollar, things like real estate.
Well, Lindsay, it's interesting that you got this graph here because, in second and third world countries, they don't put their money into currency. They buy assets because they don't know how much the money is going to be worth tomorrow.
That's so true. That's a great point, actually. And it's very common in other, like China is a good example. They're very heavy buyers of gold and silver, and they believe that to be true money. Whereas here, we're just fiat currency, right? The governments can print as much as they want, and there's no true value to it. It's only worth what it can buy that day. So it's really important to think of the inflation and how the power of your dollar declines over time when you do your investments. And the stock market has not been a great place to help you deal with inflation. Okay, so right now, it's December 2011. This is our current investment opportunity that we have from Vision Investment Properties. We typically get a new investment opportunity every 3 months. We have a lot of clients. They sell out fairly quickly, but I'm just going to show you the current opportunity. It's in Tofield, Alberta, and it's called Best View Manor. So really, it's challenging to acquire properties that cash flow, for example, right in Edmonton. Property that rents for maybe $1,100 a month in Edmonton might cost $275,000. But if we just look at the outskirts of Edmonton, we're able to get a property for about $160,000 that rents for about $1,000 a month. So it's a phenomenal trade-off in terms of price and rent to go to the outskirts of Edmonton, and they will have the ripple effect of what's happening in the booming sector in central Alberta. Okay, so Tofield is about 30 minutes just outside of Edmonton, east of Sherwood Park. Okay, so with Tofield, there's about 160 different businesses in Tofield, servicing the surrounding area of about 10,000 people. So it's got a really solid economy, very low vacancy rate, and in Tofield there's also K&M. It's a very large manufacturer of processing equipment. So they've exhausted the local workforce, and they're bringing in foreigners actually now to work for them. So they produce processing equipment for the oil and gas industry, the petrochemicals industry, and the minerals industry. And Tofield's uniquely situated to capture the growth in these industries because in the past the railroad tracks have been rerouted to go through Tofield to haul the processing equipment. And this is the place to manufacture these types of products. And also, the processing equipment they manufacture is very large, and you can't haul it on the regular highways. And so the highway that goes through Tofield is allowed to haul these large processing equipment that they manufacture. And this would then be transported maybe to Alberta's industrial heartland, which is between Fort Saskatchewan and Redwater, or even up to Fort McMurray or other areas. So Tofield's uniquely situated to capture the growth in this industry. And also, secondarily, there's a proposed coal mine with Sherritt International and Ontario Teachers Pension Plan. The proposed coal mine going in within a few minutes of Tofield would bring thousands and thousands of workers to the area.
So essentially, what you're saying is that you're not just investing anywhere. You want to find something that has good opportunity for getting good rents, not just any property will do as far as something that you'll select.
That's right, Trent. So what we're looking for is properties that will cash flow and have very low vacancy rates. And so when we go to Tofield, we have got phenomenal cash flow. The rent is $1,000 a month for the average suite that we're selling in Tofield, Alberta, in Bestview Manor, and that'll cover all the expenses. And there's extra money left over. Whereas typically, if you go right into Edmonton, your returns will be lower because you're paying about $110,000 more for the same amount of rent. Here's a picture of Bestview Manor, and you can see it's a very nice looking building. It's built in 2009, and this will attract high quality tenants because people will want to live in a nice newer property that they can be proud of. So this is a 31 unit building, 31 different condominiums, individually titled condominiums. So when you invest with us, you actually would own one of those suites or condominiums with 100% title in your name, and the rent from that suite's all yours. And it's something you control the investment. You can move into it if you want. You can sell it when you want. You can refinance it when you want. And you get 100% title to your own particular unit or suite. Okay?
But the advantage with Vision, of course, is that you help manage that.
And that's right. What we do is we place property management. We are not a property management company, but we will hire a property manager to manage that building. And this particular property, the manager actually lives in the property. So there's someone there keeping track of everyone there and making sure it's running smoothly. So that really helps. So here you can see a few more pictures. It's a very nice looking property, very attractive to tenants. With a property that's only 2 years old, you're going to have very low maintenance costs in the next 5 to 10 years, which really helps increase your returns. These have mid to higher end appliances and also mid to higher end flooring. So very attractive suites. This is just an aerial shot so you can see how the building is situated, but it might be hard to tell from the slide, but it's very close to schools, fitness centers, banks. There's a grocery store right within a block or two, and the post office. So it's very, very good proximity. Now here you can see a cash flow pro forma statement. And when we're talking about investment properties, this should be the most important thing that the buyer is looking to, because it's all about the numbers to create wealth for yourself over time. So what you can see here with a 2-bedroom, 2-bath unit priced at about $160,000. The first column here will look at a 25% down payment, which represents $40,000. But let's just move over to the right side. Is a 20% down payment is what most clients do. So you need to come up with a $32,000 down payment. So our clients would either use their home equity line of credit to come up with a $32,000, or maybe they have cash in the bank, or many clients are liquidating the stock market investments and mutual funds and putting that money to work for them. Okay, so when you look at this cash flow pro forma, you can see with the rent of $1,000 a month, you're going to pay the condo fee, $240. So the property manager would collect the condo fee and pay that to the strata. There's the $80 is the taxes. That's the monthly taxes, property taxes. And the property manager would collect that and set that aside or give that to the city. And then there's the property management fee. So we're able to negotiate a very good fee, 5% fee for the property manager. So it increases your cash flow because the average investor who's out on their own might pay 10%. Okay. And then here, this mortgage expense of $505.75. Now that is based on a 2.5% variable rate mortgage. They've gone up a little bit in the last 6 weeks. So right now it's more like 2.9%. So that would take this payment up to about $550 a month. But let's just go with the numbers here for example. So what you can see is your positive cash flow is $124 a month. And that's the extra month that hits your extra amount that hits your bank account every month. And also you have a mortgage reduction. And this is very important for investors to recognize because historically when interest rates were much higher, 8 or 9%, when you would get a mortgage, you'd only pay off maybe $20 a month. With rates being so low right now, this is a huge profit center for real estate. And that's another reason why now is a good time to get involved in real estate. So here you can see every month you're paying off $239 on that mortgage. So your equity that you're creating each month is about $363 just chucking away for you every month, time and time again. So it's a great way to create wealth.